next speaker is Aleksandra. She works at the International Bureau for Fiscal Documentation, and she recently published a PhD on taxation of virtual currencies. So please, a big applause for Aleksandra.
Thank you very much, and welcome to the second presentation today. My name is Aleksandra. I work for the International Bureau for Fiscal Documentation as a tax lawyer, tax journalist. But the reason why I'm here is that last year I finalized my PhD research on the taxation of virtual currency with a particular focus on Bitcoin. That's quite an unusual topic for a tax lawyer. When selecting my PhD topic 3 years ago, no one wanted to supervise it. When I said I would write about virtual currency, no one knew, in the tax world at least, what's that about, and no one wanted to supervise it. But luckily, I managed to settle that and complete my research within 2 years. Today we are going to talk about Bitcoin and taxes. Why this topic is important. Tax law may be complex, obscure, and not easy to understand for an average citizen. But if you get it wrong, you will face serious consequences, penalties, interests. So all this what we want to avoid. I think even one American politician said once that the Income Tax Act created more criminals than any other act of the government. That's why it's good to be familiar with the basics concepts. We just look at tax law very briefly, we will not go into many details. The agenda for today is very simple. First we will look at the famous question, what is Bitcoin? Is Bitcoin money or is Bitcoin something else? Is it security or financial product? Then we will look at how the tax rules apply to Bitcoin. We will only look at the two most important taxes. And these are income taxes that we pay on what we earn and VAT that we pay on what we consume.
Is any of the things that you will say be also valid for other coins, crypto coins, or just for Bitcoin?
Would be also valid for other virtual currency.
Okay. Valid, you can mention where it's not the same, where Bitcoin is maybe different from other crypto tokens.
Well, Bitcoin is definitely different from community-related currency. There are also virtual currencies used in online environments, such as virtual gold or Linden dollars. And there might be differences between them because Bitcoin is decentralized, can be used for any purpose, whereas those other types of currencies, they are linked to a particular online environment and only used within this environment. But this in general will be valid for all universal currencies that can be used for multiple purposes and that have a decentralized structure. So first, we have to answer the fundamental question, what is Bitcoin? Is Bitcoin money or is Bitcoin something else? Because a lot of tax consequences will depend on the answer to that question. There are different tax rules for currencies and for other objects, for example, for property or assets. But first, we must be aware that money means different things to different people. And money is also not a static concept. Money has been affected by historical developments, by political events. In the early days, people used commodities as a means of payment. Later on, those commodities were replaced by coins, paper money. For a long time, private money was commonplace. Later on in the 19th century, the government started claiming a formal monopoly over the issue and use of money. Money underwent another evolution in the 20th century with the emergence of electronic payment schemes. So now money is not only a tangible object, but also something intangible, something existing in the computer networks. There's no universal definition of money. Money means different things to different people. For economists, money is associated with 3 different functions. That's the first definition that we have here, money in the economic sense. Money is a medium of exchange, so to avoid the inconveniences of the barter system. Money is also a unit of account, so that we can compare different goods and services on the market. And money is a store of value. We can keep money and use it in the future. Now the question is how Bitcoin fulfills all these functions. Bitcoin is definitely a medium of exchange. We can exchange it for other goods and services. It is a unit of account because it's see a string of numbers and we don't know its value unless we know the exchange rate. So the problem here, the Bitcoin is still not intuitively valuable. It's not like when we see €100 or $100, we know what we can buy with it. When we look at Bitcoin, we have to first translate the value into value expressed in a traditional currency, and then we know what we can do with it. It's also doubtful whether Bitcoin fulfills the store of value function in terms of being safe and reliable, because Bitcoin is highly volatile. So in my research, I answered the question that Bitcoin cannot be considered money in the economic sense now, but it has potential to become one in the future. Bitcoin can perform some of the monetary functions better than the traditional currencies. It can be a better store of value because it answers to market forces and it's independent from any political influence, so it's not susceptible to inflation. Then we have another definition, money in the legal sense. When law, especially tax law, talks about money, they don't mean money in the economic sense. They mean something else. And money in the legal sense is associated with three more functions. It needs a central management, a government or central bank that manages the supply of money. It has legal tender status, which means it can be used to pay all debts within one country. And it has a physical carrier, coins or banknotes. Of course, Bitcoin cannot be considered as money in the legal sense because it lacks all the three characteristics. And nowadays we have also electronic money. We have credit card, debit card. There's no universal definition of what is electronic money. In the European Union, we have electronic money directive, and it defines electronic money as value represented by a claim of the issuer. And in all other countries, there are similar definitions. So they have in common that there must be issuer, there's someone who can redeem this money, and there's also linked to the traditional monetary system. The same unit of account is used, so euro or dollars. When we take this definition, we have to conclude that Bitcoin cannot be considered electronic money because there's no issuer, there's no one person, like a credit card company that is responsible for the issuance of Bitcoin. And it's also not linked to the traditional monetary system because it uses a different unit of account. So my research concluded that Bitcoin cannot be money in the economic sense yet. It has potential to become money in the future. And neither can Bitcoin be considered money in the legal sense or electronic money. Yeah. I use them interchangeably. Money and currency is the same. Well, there are different definitions of it, but for this purpose, because if you use the term money, you don't know what you are talking about. Whether you talk about money in the economic sense, you talk about money in the legal sense. That's why even this term money can have different meanings. But now I will just, currencies, we consider Bitcoin currency, it is called like that. But here I will use this definition interchangeably. Because for example, dollar is also a currency, or euro is currency. It doesn't have the same characteristics as Bitcoin, but they are described as such. Currency, I will not use it in a strict legal term. I will use these terms interchangeably. Here is what tax authorities say about Bitcoin. In many countries, tax authorities issue some guidance on the tax treatment of Bitcoin, but also on the status of Bitcoin. And the majority view is that Bitcoin is not money, it's not legal tender, but it's a property. This is the view of the US Internal Revenue Service. The same opinion is shared by the Australian Taxation Office. In some countries, the definition is negative. Tax authorities didn't say what Bitcoin is, but they said what Bitcoin is not. That's the case in the Netherlands. The Ministry of Finance said that Bitcoin is not legal tender, not financial product, and not electronic money. A very interesting case are those two last rows here. We have Finland there. And in Finland, it's actually not clear what Bitcoin is. And the story is as follows. In 2013, Finnish tax authorities published a guidance on their website, some general information how to treat Bitcoin for income tax purposes. And they said Bitcoin is not a currency, not a security, and not a financial product. And this was only about income tax. And a year later, in 2014, one taxpayer asked another agency, not the tax authorities, but the Finnish Central Tax Board. The taxpayer asked about his particular situation. He was selling Bitcoin and he wanted to know whether he has to charge VAT on that. And the Finnish Central Tax Board said that you don't charge VAT because Bitcoin is a currency. In this ruling, the Finnish Central Tax Board didn't explain why it deviated from the previous definition and what is the reasoning behind this decision. Why suddenly Bitcoin becomes currency in Finland 1 year before it wasn't. So that's a very unfortunate situation for Finnish taxpayers because even the fundamental question, what is Bitcoin, is not clear. There are two divergent opinions of the tax authorities on that matter. Now we'll have a look how income taxes can apply to Bitcoin. And the preliminary remark that needs to be made is that income tax rules, they vary from country to country. So there are different rules in every jurisdiction. In some countries, everything is subject to tax. That's the case with the United States. The US tax authorities say that income from whatever source derived is taxable. So if you get anything of value, you have to pay taxes on it. In other countries, there are other income definitions. Income are only receipts that fall within selected categories. That's the case in the Netherlands. We have 3 boxes, and only receipts that fall within those 3 boxes are subject to income tax. They are considered income. Similar rules apply in Germany. There are 7 income categories, and if something is not listed, it's not subject to tax. So that's a very important difference.
Do you know the case in Israel?
No, I'm not familiar with Israel. And this is very important because if in a country anything of value is subject to tax, it's more likely that Bitcoin will also be subject to tax. And if in a country only a particular list of income items is taxable, then it can happen that your Bitcoin transactions will not be on that list and will not be subject to tax. Here I've listed some Bitcoin transactions that are relevant for income tax purposes. And these are exchanges of Bitcoins for legal money, or for dollars, euro, exchanges of Bitcoins for other goods and services if you pay in Bitcoins, and also Bitcoin mining. And we cannot give one fitting answer whether those transactions are taxable or not, whether they give rise to taxable income. It all depends on the rules of the particular country. Very interesting case is Bitcoin mining, because in the US, it's likely to be taxable. If you mine Bitcoin, you get something valuable, you have Bitcoins, and if you pay tax on everything you get, you should pay tax on it. But in other countries with more restrictive income definitions, Bitcoin mining is not likely to generate taxable income because it may be considered something prize or reward. And prizes, rewards are not among the things that are on the list of taxable items. In many countries, a distinction is made between business activities and transactions performed in private capacity. Usually, if you are an entrepreneur, if you mine Bitcoin on a large scale, then you are subject to tax. Whereas transactions performed in private capacity largely escape taxation. If you do something once in a while, you are a casual Bitcoin seller, then in many countries you will not pay tax on it. It's just like it will be considered your hobby, something you do once in a while. You can sell your personal items on eBay and you don't have to pay taxes on it. But of course that depends on the country. In the US you have to pay taxes on everything. And tax laws also make distinction between long and short-term gains. So if you sell a Bitcoin after 2-3 years, the gain is not likely to be taxable, whereas if you buy and sell Bitcoin on a regular basis and sell the coins within a month, within a few months, then it's more likely that it's going to be taxable. So these are the general distinctions that tax law makes. First, we have to be aware that there are different income definitions. So in some countries, everything is taxable. In other countries, there's only a list of taxable items. Then we have to make a distinction between business activity and activity performed in private capacity. When we do something as gain if we sell something and make a profit of it, whether it's short or long term, because there might be different rules applicable in each situation. Now we will look at Bitcoin and VAT because that's actually more interesting than income tax. And first, some preliminary remarks. VAT is harmonized in the European Union. So in the whole European Union, we have similar rules. Countries cannot do whatever they want. They are bound by the European legislation. And if something is unclear, if taxpayers have questions about VAT law, they are referred to the Court of Justice of the European Union. So that's the Supreme Court in VAT matters. If there is even a problem between tax authorities and taxpayer within one country, the national court cannot decide the matter. It has to refer the case to the Court of Justice of the European Union because only that court is authorized to interpret VAT law, so that it remains uniform within the whole European Union. VAT is charged on supplies of goods and services for consideration. In simple terms, it means that when you sell something, when you sell goods, when you provide services, and you are a business and you get a remuneration for that, you have to charge VAT. And below I've listed some transactions that are relevant for VAT purposes, and these are exchanges of Bitcoin for traditional money, exchanges of Bitcoin for other goods and services, and Bitcoin mining. And now, from the VAT perspective, EU VAT perspective, we can answer the question whether those transactions will be subject to VAT or not. As stated above, VAT is levied on sales of goods and services. Goods is everything tangible, everything intangible is services. So in the European Union, Bitcoin is a service. It's an electronic service. It's not goods. It's incorrect to describe Bitcoin as a digital good. No, it's an electronic service.
Would you describe a coupon? If you will have a coupon for purchasing something, would you describe this as a service or as a good?
A voucher, that's a very complex issue of VAT law. So there are separate rules for that. But in general, goods is everything tangible, and anything which is not goods is services. So service can be also an obligation to perform an act, to refrain from doing something. If you promise to someone not to do something and you get paid for that, that means you provide a service.
So in that case, all crypto tokens will be services.
They will be services, they're intangible.
And that's mining of all tokens will be exempted from VAT?
Well, we will come to that. First we have to see whether VAT is applicable at all. And now we are dealing with the question, can VAT be applied or not? Because VAT only applies if we have supplies of goods and services for consideration, for remuneration, and if all this is done by a business, because only businesses charge VAT. So exchanges of Bitcoin for legal currency. Bitcoin is a service. If we exchange Bitcoin for other currency, we just sell Bitcoins. We have taxable transactions. We have a consideration. We get something in return. So that should be taxable. Then the next type of transaction, exchanges of Bitcoins for other goods. We have again Bitcoin, which is a service. We exchange it for other goods or for other services. And there's a reciprocal transaction. We give something, we get something. So it should be also subject to VAT. And then we have Bitcoin mining. And when we mine Bitcoin, we get something, we get Bitcoins. But the problem here is that under EU VAT law, it will not be considered a service performed for consideration. Because VAT law says if there is a remuneration, a consideration, there must be a reciprocal relationship. So you agree with someone that I give you this, you give me that. And in case of Bitcoin mining, it's more like a reward. You are not sure whether you get Bitcoins or not.
So reward for what?
For your services.
Running the server.
For your services, for validating the blockchain.
Right. So you're saying that if it's a reward for a service, then it's exempted from tax?
Well, it's not even exempt. It means it's out of scope, so the tax doesn't apply at all. Because for VAT to apply, you need to have an agreement between two people that you provide this service and you get this remuneration. So it has to be predetermined, and you have to be sure that you get it. And in case of Bitcoin mining, of course, if you have a big mining farm, you can be sure that you will get bitcoins, but any person can use a personal computer and start mining Bitcoin. Of course, the person would never get any Bitcoins.
So if I just take this analogy now, and if I, for example, in the Zeus, I'm contributing development, but I'm not guaranteed that I will get any tokens. If the community will like it, they will get tokens. If they won't like it, I will get none. So this will fall again under the same.
Yeah, it will be the same. If there is no agreement, if you don't agree
well,
on
there is
any
general agreement. There is general agreement that the community, if likes it, will pay. If not, no.
But you don't have a recipient. That's also important for VAT purposes. There must be an identifiable person that you provide the service to. So you can't provide services to everyone. And there was actually, well, it's not about virtual currency, but there was a case that reached the European Court of Justice, and it was about a street musician. A musician played in the street, and of course then he got money. And the question was whether this is subject to VAT because he provided services, he played music for the full community, and he got money. But the question was, do we have to apply VAT or not? And the court says we can't apply VAT because he provides services, but there's no recipient of the services. The recipient is community. Community is not a one person, and only individual persons can be subject to VAT obligations. So the court says no VAT because it provides services to community.
So even if the community themselves decide to give you like tips instead of aforementioned, contractual obligation amount by contractual obligation, then even that is VAT subject to VAT.
It's not subject to VAT. If there is an identifiable recipient, you know
Right.
from who you get payment, and if you agreed on the payment, so you know the amount. Because if
Okay.
the amount you don't know, if you play music in the street, you probably will get something, but you cannot say how much you will get, and you cannot demand payment from anyone.
When you do a Bitcoin transaction, you pay a small fee to the miner, so that transaction would be VAT